Hey, what's up, everybody? This is Chef again, coming out with this weekly watch list. And let's talk about this market. All right, hopefully everybody had a great week and didn't get too caught up in bag holding something you shouldn't. I know some of you probably didn't understand the volatility and things like that, but it's okay. I know there's a lot of new traders out there who are still learning to trade the volatility in itself, and then also the catalyst that's going on in the market. So we're just going to talk about a few things here and mention a few tickers that probably have some good potential, whether it's an upside or a downside. It's still, everybody has to do their own due diligence, because this again is just our opinion. But we do have a great level here for the ES, right? So a few things that are happening in the market. Please make sure you guys go do your research. Things that have to do with inflation, things that have to do with oil, the financials, and then the new COVID thing that's going on, the Omicron, and then the Delta virus, and I don't know what else is going out there. But there's all kinds of fear in the markets, and the news is pumping a lot of fear into social media, and it's just spreading the word like a wildfire, right? What happens when there's tons of fear? We have this VIX index that creeps up, right? The fear is shown here by the candles. And last week, you guys remembered, if you watched the weekly watch list, I did point out some characteristics here for the VIX. And so far, everything has been correct. Okay. Every time we get a nice pump, we get a good pump with the next candle being red. And it happened on every single spot right here, as you guys can see. And every time we went red on the VIX, it was an actual dip buy in the market. So I'm still looking for the same characteristics. Nothing's really changed. The only thing that changed here is that the fear was a lot more greater than all these other ones right here in the past. So it looks like the characteristics has changed just a bit. And it confirmed from this candle alone that the fear is still here and the fear is still high. So that's one thing to note in the VIX. There's nothing else about it. There is no such thing as a level hitting and that being a key level. Okay, there is no such thing as that. You can't come on here and chart a bull flag. You can't come on here and chart a falling wedge, a rising wedge, whatever you want to call it. You can't chart the VIX because fear cannot be charted. Okay, let's make that very clear. If you don't know what that means, again, please go do some research. But the characteristics here has changed, like I mentioned, and this candle ended up being green. So we have a nice green candle. So I'm still looking for the next candle to be red. Once the next candle becomes red on the VIX, I'm legit going to look for the IV to decrease. Sorry, so I'm gonna go to the trade tab here just to show you guys, give you an example as to what to look for. Let's just say market was open right now, and you go to these option contracts right here, 248.91%. What you want to see is for this to decrease, maybe go down to 200 or even 180 and 170 and 160, so forth. While that's happening, you're able to buy the dip in the market. Because what's happening is that there's not a lot of people buying into this, the fear. Okay, so the IV decreases, creating less volatility. So this is just another tool for you to look at while you're looking at the market, while the market is dropping down very hard. And you got to ask yourself, like, where are we dropping into? We may be dropping into a support area. Let's just say, for example, this is the next support that I have here. Okay, so that 44.50, and we end up landing right here. Well, you got to be able to look at the VIX and compare and say, okay, is the IV decreasing while we're right here and bouncing? If that happens, you're kind of using the tools in the market to help you buy the dip, and you're looking for a dip buy opportunity down here with your stop loss right below, and your stop loss using the VIX as the IV does not increase. If it increases, then stop out. If it decreases, it's going to be a good opportunity to buy the dip. Okay, so just look at it like that. Bigger time frame views. It has to be at a major level. It can't just be like some random 5-minute time frame support and you're like, oh, this is the major key level. It doesn't work that way. Okay, you got to be able to look at the bigger picture and look at the levels that matter the most. Okay, the bigger the time frame support and resistance, the bigger the bounce or rejection is going to be. In this case, on the weekly time frame, as you guys can see, the same chart has not changed whatsoever. And we did come down here and we ended up on a red day. We broke right below the zone, but we're holding the zone and we're retesting this previous high and this previous breakout. So we're right here at a very important level. What do you look for? Technically, the volume was very, very aggressive. So the volatility, like I said, is very, very high. And while this is happening, there's still a lot of fear in the market, guys. So the movements in a lot of the tickers are not going to be normal. So let's just say the ATR for your stock, it was like $2. Now you're going to look for a $4 move because now the aggressiveness in the market is going to cause bigger movements. Okay, so be careful for some of that, and don't think that this is normal trading, because this is not. Okay, so keep an eye on that, guys. These are the only levels that I really care about for the ES, which is your 45. What is this? 4505, and then the 4540. Just rounding it off. And then up here, this is supply. So I don't really have much of a rejection over here. If you do want to use this, use 4590 right here, just at top of that candle body in this bottom, which is like your 4578. Okay, if we can't get above this, we're definitely going to continue on to the downside, and I'm going to look for something like this. Okay, so man, I wish this candle wasn't here, but I would look for something like this. This is kind of like what I'm going to look for this week. Not that I'm bearish in the market, but if we do reject here, I would expect the next few candles to come into this level. It would be nice to actually see some red, and not that I'm bearish or expecting some crazy movement to the downside, but that's kind of like a preview of what a rejection can look like. Okay, remember, this is on the weekly time frame, guys. So if this thing happens this week to come up here to this 4580 and we just can't break above, let's just say Monday, and then Tuesday we just start getting smacked down, you'll see this candle go red right away. But I wouldn't short until 4540, basically, sorry, 4530, the bottom of this red candle right here, and then drive it down to that 45. And then if we do break that 45, we're going to be looking for 4450, and then the 4410 down here for these levels to retest. But again, the market can do whatever it wants, and it's retesting here. So we can just base out right here for the rest of the week in the market in general and find some support everywhere. Then I think this will be a great opportunity for a nice dip buy to the beginning of December, basically this week, right? So we end of the year kind of doing something like this versus something like this towards the end of the year. So whichever one comes first, it doesn't really matter, because we're just going to set the alerts and follow the direction, right? So no bias here, just setting the alerts. Here is your level where we have to stay above, and then here is the level where we're going to break down. Very simple, right? One alert right here, just 4590. One alert down here at this 45. Very simple. Is either we're going to get rejected here, or we're going to break above and stay and make new all-time highs. We get rejected and we come back down and test this level towards the end of the year. Okay. So keep it very, very simple. Let's look at NQ. So it's almost similar with NQ, right? This line right here, this is all I need for the confirmation to continue to the top side. Otherwise, we are retesting this level that we do have potential. If we break this 1566, what is it, 6660, then for sure we'll come down to this level, 15445, and then from there we drop down to this 15. Yeah, we drop down to that level. Same thing as ES. Maybe look for something like this. If not, we break above and we make all-time highs. Very simple, right? So keep that in mind. Now, the other big one that I kind of have a questionable bullish sentiment, but also a kind of bearish here. Okay, this is if we get a confirmation here for a bearish market, I think IWM is going to be the first one to crack. Okay, you guys know that the RTY, the Russell, the small caps is something that I've been personally talking about. Probably the biggest one out of every video that I talk about. I always mention the Russell. Always make sure that you guys have those alerts over this, like 2360 and then the 2330. Just anywhere above the 2300, we're going to be looking bullish and then breakout for all-time highs. But it looks like we still haven't, which is okay. It doesn't have to break above. It doesn't have to break below. It can stay sideways like this as long as it wants. Okay. Now look at look at this trend. Like even here, we trended for such a long time. Okay, here we trended for a very, very long time, and then until we finally found a trend here, and then now we're almost having the same price action. The price action meaning that something that's been repeated in the past, this huge range for a very long time. And then now we're doing it again. We're building this range up here, and we're questioning if the buyers are going to show up. This is my level where if buyers do not show up, this can be an aggressive sell-off. The aggressive sell-off, because at the end of the day, if we break above or below anywhere between this level, it's going to create that demand or it's going to create that supply, and that is a very very big level to break. Okay, so this almost looks like a 3 black crows. If you guys don't know what that is, go search it out. Okay, basically 3 red candles in a row, but it does look very questionable of a bearish. I really don't want this to be bearish. I don't want this market to, you know, collapse or anything like that. But again, just follow the levels, right? But this one is very simple as well. Below this candle body is 2155. Okay, even 2160 just for the whole number. It would be a short all the way down to this 21. Okay, the 21. Otherwise, I am looking for a reversal, some type of reversal, because there's a lot of demand here. As you can see, all these wicks have been getting filled, and they're causing the candle bodies to close above. And these candle bodies right here at this 2160, we haven't closed anywhere below until this one. For this one, we closed right below the 2160. We closed around 2150, I believe it was. Yeah, around 2156, 57. So it's kind of looking weak. You know, the Russell has been getting hit drastically, and we're finally again at this level where it got bought up for like a whole year already. It's been getting bought up at a whole year. Okay, so the demand can be strong, and we could see a nice green candle on IWM, but again, we still got to make sure that the market sentiment is, you know, showing some type of reversal, and we're not looking too bearish, right? So we're going to look for RTY to just come up again. Over the 2160, anything above it is long. If we come above the candle body, this one here, we'll look for like a bullish engulfing. So if you're talking about the 2230 level, if we can break 2230, we're definitely going to look for calls and swings all the way until the end of the year, right? So kind of look like this into that supply. So good area, good opportunity to even just start loading up on some IWM shares. Because your stop loss is literally legitly right below. Okay, stop loss is very minimal with the reward being very high. So kind of look at it that way. Okay. Oil. I do want to mention oil because it does have a lot of weight in the market as well. A lot of times when we see oil dropping down, we do see the market pulling back just a bit. Oil is a very, very important tool that you should be looking at, a very important sector that you should look at and keep up with, and it's very very good to know. So keep this one simple as well. I'm using the candle body again. We need to hold this 65, okay, and we need to break above that 69 and 70 just to start continuing on the trend up, because technically this thing has been getting hit. Again, the volume was aggressive this week, this past coming week. The volatility was truly insane. And I know a lot of people played puts everywhere, but some people got smoked on some call plays as well. So it goes both ways. You just got to be able to know and understand when it's okay to buy the dip and when it's okay to short the tops and when to get in and out. And this was a perfect week for everybody to learn that you got to be in and out of plays. You can't just bag hold something, and it's okay if it doesn't run. You know, if you didn't catch the whole move, it's okay. So don't beat yourselves up. But again, I think this is a great level for oil. It did have a nice wick right here, so it's showing buyers. This is why I said that the candle body would be my entry, and then stop loss as well. But I'm just gonna look for some recovery in oil, honestly. And I know gas prices are super expensive, and we want this thing to drop some more. You know, gas prices in Cali are over $5 for the premium, so it's kind of heavy for me. But either way, use this as a tool to guide you guys and to gauge in the market sentiment to give you something good. We want some green on CL. So if you guys want to check out FANG, also this thing moves with it. So check that out. Okay. There's other oil tickers too you guys can check out. I'm sure you guys can do your own DD. So anyways, I want to look at financials. Financials is at a good spot right here as well. It had a nice volume. Again, everything is going to look the same. Everything's going to have a huge red candle. We're just going to determine where this is all going to be because having huge volume on this week, it's going to determine whether we had an intense amount of sellers or an intense amount of buyers that came in at those dips. Okay. One of the two is going to come out and we're going to see the results by the end of the week. So with XLF, if we can hold just this 37, I do have my alerts right below, right here. So just to show you, just 37.44, I have it. And in case it does break, this little trend line, it can be a nice sell-off for XLF, but again, it could be the most amazing dip I ever. So I'm just ready for both. For this one, I'm going to wait for market open, but I really would love to see a nice green candle to show a bullish engulfing in the financial sector. We do have Jets. This one, I personally am not looking at Jets yet. And the only reason for that is because it gave up all this level right here. I thought it was a very important level. I really thought we were going to hold here, but unfortunately, this new case again, this new COVID thing is happening, and it's bringing a lot of fear, and it's hurting the airlines a lot. And like I said in the previous videos, you know, airlines need a good excuse to, you know, start turning back around. And so far, it's not happening. Again, I am in some long-term shares for some DALs and AAL and airlines in general. But again, to day trade and swing some calls for these, I don't think it's the right time yet. Just because this support, this demand, it did break, and we still don't have, you know, some good news and some good airline news that we can use as an excuse to continue to go long in general. So it's not really a good spot yet. So it doesn't have my intention until we can start breaking above this yellow box right here, the 2160. If we can hit 22, then I'll start looking at it again. Otherwise, I'm going to leave it alone. I don't want to mess with it, and it's not going to be on my list until that hits. If that hits this week, then it's definitely going to be on the watch list next week. Very simple, right? You just set the alert, you sit there and wait patiently and let the things come to you. You don't got to go and try to chase the bottom or something like that, okay? ARC is another one that was on the watch list as well last week. This thing ended up cracking down. This was the last support that it had, and it was pointed out in the list. And then you can see it had a nice drop from the 105 all the way down to this like 91 area, which was a pretty hectic drop. So I think for ARC, we could probably potentially see a nice dead cat bounce here. If you don't know, again, go search it out. But basically what that is once you drop here, you're going to see a nice relief rally. We're going to see a bullish rally here, and you could have opportunity to day trade this. But again, this thing looks bearish. It looks like it broke some levels. And I personally don't like to catch falling knives like this unless they make sense. It is at a weekly level right here, this 90 and 91. Those are the levels where you can dip by. Other than that, below 90, I wouldn't touch any calls whatsoever. But ARC is at a good spot. If you want to take a look at ARC, make sure that Tesla is holding. SQ is holding, you know, Roku is holding, TDOC, and like a bunch of other tickers that they have. So Tesla is the more of the heavyweight in the ARC sector. They are loaded more on shares with Tesla. Again, do some more research on that if you guys don't know. And again, this is a good opportunity to dip by as well, but only if the market sentiment is nice and bullish. I wouldn't be buying on a bearish sentiment, okay? So just kind of look out for that. All right, so I'm going to point out Apple. Apple, we had a good run last week. In the past 3 weeks, it's been amazing. I know everybody's been watching it. A lot of people are, you know, in calls for Apple and things like that. It's just a great stock, right? Great company. But look at this nice trend, okay? I want to point this out. No, I know a lot of people have this trend line, and it's cool because we are trending up. The one thing about this is because of the selling pressure in general, we do have a huge wick. So from this 162 all the way to that 170, you have tons of sellers, okay? We have no candle bodies up there whatsoever, okay? So I'm going to keep this very simple. We're at this all-time high with a market sentiment being bearish. That's one. Two, Apple is very strong. Three, If we drop and we continue to sell off in the market, Apple can come down with it. So where do we come down and how far? Okay, this level right here. From where do we close? At 162. This is your trigger to go long. And then this candle body right here is your trigger to go shorts. Very simple, okay? Use this candle body as your support and resistance. We break above, we're long. We break below, we're short. And the target is going to be this trend line. I know it may seem like it's a long shot, maybe a long ways, but Apple's a great stock. It might consolidate here, cool. But use this level as your break above and your break below, okay? Because it could have a nice pullback and a nice red candle if we do see that. So the way that I would see it, if it does drop, Apple would have a nice red candle like this, only to retest this level. That's the way I would see it. I'm not saying that that can happen in this week. It would be nice to see Apple pull back and then short it all the way down and then buy the dip down here. But again, Apple's been showing some relative strength in the market, even with this huge volume. But the pressure is, building up in here, and it's creating a base here. So breaking above 162, I am long. If we break below this 159.50, then I am short. Okay. So very simple using the weekly time frame. Okay. So now what I'm going to do, so I'm going to go on the 4 hour and give you guys some charts to look at and just kind of show you why it would be a little bearish. Okay. Look at the rejection here. Okay. Look at this red engulfing. Look at the reaction here. Almost like a little weird head and shoulders type of thing that might play out. So again, if we break above this 162, I am long. Okay. If we do break below these levels here, these candle bodies here, then I am short. Okay. You have a target down here of 156.80. Well, you can just round it off 157. And then we have another target right here on this little base that can lead down to that. Okay. Very simple. Okay. I think that is the simplest plan that I've seen so far. Microsoft was on the list. I hope some of you guys took it because I did mention it to you guys on Thursday. And this thing had a nice setup and it gave up its demand. It gave up its demand. So the way that you see it, it's a drop, base, drop. Okay. Usually when you see this drop, base, drop pattern, this thing has a higher probability of continuing to the downside. How will you know if it's going to continue? If we see the rejection right at this level right here. Okay. If we can't even make it to that retest, if we can't even make it on /NQ or /ES to go green, then we will not get that retest high enough. What's going to happen is that this thing is going to get that relief rally, the retest, and then just start trending back on down for the continuation, which will create a nice downtrend pattern. And it's okay. All right. So kind of like that. Below the 320, go ahead and short it. Otherwise, you can short the top up here and then just write it down because it's going to be the first time retesting. Okay. For Microsoft. Your target is going to be down here, 315, potentially 310. If it wants to keep on dropping, it'll hit this 305, guys. All right. So giving you the worst case scenario here. Otherwise, we're looking for a nice retest. And if we can go back above this 330, then we'll be bullish on Microsoft. But for now, let it do its thing. Let it do its retest, its reject. If it wants to build a pattern somewhere in here, let it do so. Or just let it continue down 320. Tesla, everybody's watching Tesla. It's like all eyes on me for Tesla. Everyone is a fan of Tesla. But look at this nice little pennant on Tesla, okay? I just want to point that out and make sure you guys have it. I will not be trading Tesla, but you guys go ahead and trade it. It has some volatile moves, and ODTE Fridays are amazing. But again, let's look at the 4 hour. Here's your last line of support. Psychologically, everybody's going to be looking at that 1K number. The 1K number is going to be a key level for everybody around the world. Okay, every retail trader out there is going to say the 1K. If we hold, we're good. If we don't, we're dropping on down. And guess what? It's going to catch a lot of attention. Catches a lot of attention, catch that momentum if you guys have the account for it. Grab some in the monies, don't grab weeklies, grab next week's, let it do its thing, and let it drive. Okay, very simple. Above 1K, we're bullish. Below 1K, we're bearish. Below that 1K, it's going to break this trend line and everybody's going to have it. and everybody's going to know that it's breaking a weekly time frame pattern. And if it does break this has room to drop down to this 947, and everybody out there is going to be talking about this little gap fill right here, and that's going to be their target. They're going to say 900. Okay, we're going to say Tesla to 900. We're going to crack that 1K, and automatically it's 950 and 900. So make sure you guys pay attention to the way that Tesla moves this week. We could definitely see a nice relief rally to the 1050, even as high as 1070. But again, make sure you guys set some alerts. Over 1K, we're bullish. Below 1K, we're bearish. Okay, it's a psychological thing where everybody's going to have all eyes on me type of deal, and everybody's going to be watching Tesla. All right, GS. I have this one marked up only because the financials. Okay, you guys saw that I pointed XLF. Okay, so I have XLF right here at a very important level. So GS kind of caught my attention because if you look at it, it almost looks like we're curling. Okay, just like we created this double top, and now we're kind of like curling on down. Okay, so I put this here for a question mark just to remind myself for later that in case we do see this, we have potential to break. Okay, we have potential to bounce here with the XLF if we do bounce off that trend line, if we do bounce off that yellow box of support. But so far, we got to wait for the market to do its thing. This one below, psychologically, I would say 380 and 370, 377, 378 around there. We could look for a bearish momentum move all the way down. I don't want to say this, but 348 could be a huge move. Again, it doesn't have to happen within a week, but mainly kind of just got to gauge in with the XLF and kind of see how it's happening, because right now we are on this nice little downtrend. We are building this nice demand here. So this is going to be one of those plays where you just sit back and watch and just wait for some momentum to kick into the financials. So if this thing starts dropping, I already have my alerts down at the bottom. If we start cracking down, I'm definitely going to be in some puts here right at this box. And if we do crack open to the top, then I want to wait till we get above this 390 level. 390 level, I'll feel more comfortable going long. Otherwise, I'm still leaning a little bearish on GS, and it's just because of the bigger time frame. It looks like it's curling down. Otherwise, this can be a great dip buy opportunity. All right, CAT. CAT is another one that I personally like for some call plays, and just to keep it very simple. A lot of these charts are actually very simple due to the closing on Friday. And all I really just want to use is 198. Okay, so 198 for CAT, I am bullish. Anything above 198, I'm looking for this 201.50. If we crack this 201.50, a lot of people are going to be looking at this gap. Okay, so your target would be around 208. Oh, sorry, 207. So those are two things about CAT. CAT is definitely at a great spot, and it's been basing out at these levels down at this bottom. And it looks like we retested already this nice demand right here, nice support. Okay, so I'm looking for CAT. I think I'm going to be looking for a call play on CAT. I know we're still on this nice downtrend, but again, if we can just hold these candles right there, the candle bodies break above, break below, I'm definitely going to be looking for this as one of my top day trades if it's just a day trade. CAT doesn't really get affected that much by market movement in general, so it can be a great opportunity to look for a buy. All right, Starbucks. I want to mention that the weekly time frame. I want you to look how important this is. The pressure that's being built here. Look at the pressure that's being built here the past 3 weeks. The past 3 weeks, look at the wicks. Okay, so from that 114 down to the 108.60, you just say around 109. It's been getting pressed here. The buyers and sellers are still fighting for the value of this stock. Some buyers are still coming in heavily. Other sellers are still coming in just because of the sentiment in general. The market is very heavy on the selling side, but the pressure is building and Starbucks is holding. If Starbucks holds, okay, sorry. If Starbucks can hold just these levels right here, I want to be able to go long over 112, 113, and 114. Okay. I would feel more than 100% comfortable buying the dip right here. 109, and then your stop can be 108.70 right here using that little wick. Very simple trade. Starbucks does have a lot of pressure, so whichever way that it pops, believe me, it'll have an aggressive move either to the top or to the downside. So alerts on 112. 113 would be your first target. If we do gap up and we'll break 113, then we continue 113 to 114. People are going to look at that little gap that's right there. Okay. If we break 114 and continue, we're going to hit this top right here, 117. So look out for Starbucks to have some movements one way or the other. Okay. J&J is the other one that I like. I actually like the weekly. Just to show you guys like what I'm looking at when it comes to the weekly time frames. I look at the bigger picture, guys. It's very important to always look at the bigger picture and understand what is happening within the levels of demand and resistance, right? Supply. In this case, what we have is a very strong supply here for J&J. Look at all those wicks. So it pressed it down below, and all this became a supply. But then you have this whole level over here that became a demand, and you see the same thing here, and then you see the same thing here. So all these buyers are still coming in for J&J. What this creating on the bigger time frame is a drop-based drop, and it looks like after that initial drop, it came back inside, and it's pressing here with a nice little doji candle. Okay, that the candle is a nice little doji. So if this thing can break above 160, I would expect a nice move to do something like this. I would love to see a nice bullish engulfing candle on J&J while the market just, does its thing and J&J shows relative strength. The volume here is very aggressive. And the fact that it held and it created a doji means that there was pressure of buying right at the bottom versus selling. Had this been selling, I think the candle would have closed right below and it would have showed a bearish candle. In this case, it's showing a doji with huge volume and identifying and giving us that relative strength in the market. So this one can be amazing if we can go long. Okay, gotta delete that. I don't know what's going on here. Sorry, guys. Technical difficulties, but here you go. As you can see right here, see the resistance. Let me delete that box. All right, and let me just show you again. Right there, just that little piece. I just wanted over 160. That's it. We can crack that 160. I think J&J would be a nice long position because we closed up right into supply. So if we break that right there, we're definitely going to look for a piece of this wick right here, 161. We're going to look for these tops right here, which is 162.20. Then we're going to look for 163 and then 164.50. So on and so forth, right? Just to give you an idea of what I'm going to look for, I think this one can be a great day trade, just like CAP. Okay. IBM as well. I think IBM has a great setup here. Okay, after that huge drop and everything, look at this. It closed, right? How many stocks can you find to have green candles from the Friday's drop, right? And some of these stocks, you got to know that they're at these bottom levels and they're showing that there's buyers still coming in. The buyers that are coming in that are, getting ready for next year, potentially, investing into something like this and find great dip buy opportunities, because it's not always just about day trading. Okay, it's about finding something that has value and something that's holding and building a accumulation phase, which is a lot of investors coming in and buying while these dips are happening, while the retail crew doesn't even think about buying long-term shares. Okay, you got to rethink something. If you're retail crew and you're showing some good profits, start grabbing some of those profits and putting them into some shares. Okay, it's okay if you have a 1K account and you can grow that 300%. But what are you doing with that profit? What are you doing with that 300% gain? Are you reinvesting into something that's going to be long term? Are you doing it short term? What is it? As long as you can keep that consistency, build and start building and build and build and build. Continue. Okay, I started buying shares already for Disney actually and some airlines. So I'm still building onto something that I believe is going to have a long term growth. So just giving some opinions out there. But over 119 for IBM, I think we can break above and hit 120. as high as 121. If this thing wants to keep on going, I'll look for 122. Just some small account play right here. Otherwise, I would look to buy the dip right here at this little bottom, which is like your 117 with the stop loss of 50 cents, which makes sense. So keep a lookout for IBM for sure. I think I'll call this one out in server. In the bot, a lot of you guys will get the message. I'll even post it on Instagram for you guys because it's a small ticker that we can potentially get into the swing trade. V is another setup here that I have on the 4-hour. Very easy. We break this little trend line. We're breaking above, and that's all I'm waiting for. I'm not looking for the short side. If you want to play the short side, I would go short right here. Okay, 196. Psychologically, 196. If you want to wait till you break this 194, then go short from 194. But honestly, my entry would be right here if we can't break above 198 and 199.25. So very simple. Again, clean setup. I'm not waiting for the downside. I'm waiting for the bullish side. So however we get there, if it takes 2 days, and it takes 2 days, otherwise I'm not looking for a short. But you could follow the trend to the downside if we reject with the bearish sentiment overall in the market. Disney is the other one. Again, this thing had a nice trend to the downside. It finally broke here on Friday. It broke above. It stayed 146.50. And now what we're doing is we kind of just retested the bottom and then we bounced. So if this can stay above 148, okay, just a psychological 148, then Disney could start seeing some type of reversal. And everybody knows that Disney's a great company. And, you know, I think it's going to catch a lot of attention. You guys can see all my alerts here to the top side. Otherwise, I have alert weight down here at this like 140, 180. If it does crack 142, giving me an opportunity to dip buy. But for now, if we crack 148, look for 150, 152, 152.50, 154, as high as 155. That's what I would look for Disney. If this thing wants to have a crazy week, this thing will go as high as 160, 164. So that can be something amazing, but you know, stocks do whatever they want. So my alerts are here for Disney as well. All right, so another one for a bigger account is MA. For MA, I think you guys should be very well aware that the spreads are a bit wide and they can be a little more on the expensive side. Okay, these are not like $1 contracts. These are like $8, $9, $10 contracts, which in other words, $800, $1,000, and things like that. So this thing did hold. Okay, I like that MA actually held, and that's why I pointed out V, because they kind of correlate together. I do like the 4-hour time frame here. Okay, again, it's like the same setup as CAT and J&J. Okay, we're holding this piece right here. If we can stay above 322, just 322, I am taking this long, and my first target is right here. Okay, the 330. It may seem crazy, it may seem long, like an $8 move, like, hey, are you going to catch an $8 move? Well, it's because we held on Friday. We had a bullish candle on Thursday. Friday, we held through the whole sell-off in the markets. Right, we came down and we pushed back up, and we closed right in this level. So we kind of closed indecisive. We closed indecisive, which is amazing. At the same time, we kind of gapped up, which is awesome. I don't know where the features are going to be early in the morning, but right now it looks like a lot of them did gap up, which is kind of exciting. And you know, everybody's just waiting for that bullish momentum, and everybody's just waiting for that amazing dip buy. But again, here is an awesome setup for MA. And again, you got to be careful on the spreads. They are very heavy. They are higher risk, but anyone with a bigger account can trade this MA. Once we break the 330 though, this honestly legit can hit in one day. Just an FYI, MA does have aggressive moves. As you can see, these moves have been aggressive. And even from here, from this bottom of 325, we rolled all the way to 340. So that's a pretty big move. And if we do crack this 330, like I said, and we break above just this wick right here, 332, we'll definitely come up here for this little gap fill that's going to catch a lot of people's attention. And it can hit that 340. So keep your alerts on this one as well. A lot of good setups out there, guys. You just got to be able to go out there and search for them. All right. So I'm going to leave you guys with that. So MA, Disney, V, IBM, J&J, Starbucks, Cat, GS, Tesla, Microsoft, Apple, and of course all the futures which you guys can look at. And let's wait for the market to do its thing. We do have a nice gap up, but again, we are on the staircase pattern for ES. The staircase pattern to the downside with volatility, increased volume, a lot of catalysts going on in the market that's driving everything up and down. So if you're going to swing trade anything, make sure that whatever you're swinging, you can handle 100% loss. Okay, do not swing weekly contracts. That is the most risk you can put on the table, and it's probably the nicest way I can say it. But just know that if you do swing weekly contracts, you're putting the risk on the table very, very high. So expect gap ups, expect gap downs, expect huge abnormal movements in any stock in general, but watch for those that do hold with normal movement. Okay, the market is amazing. It's giving us some great opportunities to dip buy, great opportunities to short, great catalysts to use to the short side, and great catalysts to use for the amazing dip buys that are out there. So keep in mind, guys, all these tickers are at great levels. Keep eyes on PayPal as well. I'm gonna bring it up again, and it's creating this nice space here. It's just a little more volatile. Over 190 is going to be the level of price action that changes for a reversal. Okay, so anything on PayPal over 190 is going to be amazing. Down here, be a little more questionable just because the moves are getting more aggressive, as you can see here. See how aggressive this is? These are a lot more aggressive versus all these moves right here. Okay, so be aware. If we break 190, guys, know that the buyers came in here somewhere, or it's literally just going to keep on continuing down. But in my opinion, I think PayPal is a great stock. It's a great company, and future reference, I think they're going to be, back up into the 300s in no time, probably by the end of the year. But on the weekly time frame, look, we're at some weekly levels again, and I can legit say that PayPal is a great opportunity to dip buy. But again, it's only a great dip buy if we have a bullish sentiment in the market and we don't have nothing too crazy going on. This news can just be another way to fear and give us all great dip buy opportunities, but it can also be the beginning of a bearish trend in the next few weeks into the end of December, or just to end off the year. Who knows? So just keep in mind, guys, set those levels, hold on to the weekly watch list, and follow along. If you don't, then that's cool too, as long as you come back and learn something and we provide the value for you guys to break something down. But yeah, I'll leave you guys with that, and hopefully you guys have an amazing week, and make sure to manage your risk properly, guys. Don't bag hold something you shouldn't. If you have to think about it, get the heck out. If you have to think about entering, do not enter. If you have to think about taking profit or cutting loss, get out. Okay, don't think, just do it. You should be comfortable entering a position and comfortable taking profit, comfortable entering a position and comfortable stopping out. Okay, if you don't feel comfortable, you should not be in the position. Okay, or you're in just too heavy and go lighter. So leave you with that. Enjoy the rest of your week, guys, and I'll see you guys next Sunday.